Welcome back to Soar Financially, everybody. Thank you so much for joining me here. My name is Kai Hoffman. I'm the @JR Mining guy on Twitter and the CEO of the Soar Financially Group. Really looking forward to this discussion today because now we're talking with a technical trader. It's Chris Vermeulen here in a second. We'll talk a lot about gold and silver today. We've talked a lot of macro on this channel in recent weeks and days. Now let's focus a bit more on the precious metals because I think they're really, really important coming from the mining space. They're extremely important to me and close to my heart, of course. Before I switch to my guest, hit that subscribe button right there. I know 80% of you watching are not subscribed to this channel. Please change that. Really appreciate it because it helps me bring guests like Chris and other fantastic guests on this channel. Really, really appreciate that. Now, let me bring back on the screen Mr. Chris Vermeulen. Chris, it's great to see you again. Thanks for joining us.
Yeah, thanks for having me, Kai. Always a pleasure.
Absolutely. Yeah, looking forward to this discussion because we're going to focus, I wouldn't say almost exclusively, but a lot on the precious metals, of course. And to kick us off here in the discussion, like what is the current health of the financial markets and how happy are you with the gold and silver prices?
Well, I mean, I would say, there are a couple questions there. The overall market, I think the markets are clawing their way back up to potentially to try and get back up to all-time highs or a major double top. And I think the financial markets are on the verge of a big downdraft. I think we're going to run out of steam here. We've been seeing lots of money pile into the growth stocks, technology, AI. It's been a bit of a feeding frenzy. The same group of people that kind of really drove up the growth stocks during COVID before they topped out are kind of back again. And they've been buying those stocks, and we've seen the money start to flow out of there over the past month. So I think the markets they're getting a little into the nosebleed section. I think they're about to run out of steam. They might go a little higher, but I'm pretty bearish on the equities market in general, looking forward longer term.
Fantastic. Yeah, I was going to stop you there because let's gold and silver in a second. I got ahead of myself here asking you about how happy you are with the gold and silver price. But let's talk about the main markets for a second because the money has to flow somewhere. Mm-hmm. And now I have to ask you, like, where is the money flowing if it's flowing out of the main markets?
Yeah, well, what's interesting is the way I use technical analysis, cycle analysis, and how I use intermarket analysis, which is, as you know, most asset classes are connected in some way. If something goes up, something goes down somewhere else. Money is constantly shuffling and shifting around through the financial markets. And what's really interesting is when the stock market was out of favor, this was early this year, and even parts of last year, we saw the gold miners rally very, very well. They took the lead and went higher while the stock market was not favorable. As soon as we got a buy signal in the stock market, we moved into tech, the NASDAQ, the SP 500, the stock market took off. Gold miners put in a double top this year, and they've been going sideways and lower pretty much, for several months. And what's really interesting is the market just turned and gave us a sell signal last week. And gold miners have found a bottom. They're starting to rally and move up with some pretty good volume and some power behind them. So we're seeing definitely money's rotating, as you're saying, out of equities, out of growth stocks. And now it's starting to actually rotate into the precious metals space. I think there's room for gold miners like GDXJ to rally, 5, 20, 30% potentially, maybe go up to the recent highs that they had as that defensive play. And we've seen this before in 2007, 2008. We start to see the stock market become weak and money piles into commodities like the precious metal space very quickly. And so I think we're back into that. And I'm looking at higher prices for the miners going forward.
Was there a potential trigger? Because last week I didn't see much. So I'm curious if you identified something that changed momentum and sentiment. I saw gold obviously go up a little bit, but what triggered that?
Yeah, the trigger is our stock market strategy, our analysis that's saying, hey, the stock market has now officially turned into a downtrend. We don't want to hold stocks. I like to look at the stock market like the ocean. It's a tide. Either the tide's going up and most stocks are going up, or it's going down. And when it's going down like it is now, we don't want to be holding stocks because most of them, as you know, all boats go down with the tide. So that is our turning point. That's our trigger. Our technical analysis says don't hold stocks. But gold miners they buck the trend. They can buck the trend. They've done it this year crystal clear, and it looks like they're starting it again. So even though like GDX, the gold miners really aren't showing any new trend to the upside, our technicals are saying, well, it looks like the money's about to flow there and that new trend is about to start.
Yeah, interesting that it holds as well, because end of last week, Jerome Powell, obviously from Jackson Hole, mentioned, well, we might have to keep rates higher for longer and might actually
Mhm.
have to increase rates still. And
Yeah.
that didn't shock the market. I was surprised to see gold holding steady, actually ending green on Friday and unchanged, meaning not trending down, because that's usually the case as we're fighting higher interest rates.
Yeah. Yeah, I mean, gold's doing exceptionally well. When you look at, the monthly chart of gold, yeah, it's been trading down and sideways for like 3, 4 months, but really it's still trading. When you look at the big picture, it's trading right up near all-time highs. I mean, it's not far away. It is a very strong asset. It's known as a global kind of defensive safe haven play. So it's not just, North American people buying into gold. It's the whole world is nervous and they continues to just keep trickling into gold and it's holding its value. You look at gold miners, they're down like 45% from all-time highs, where gold is right up there. And that to me is a sign that we're seeing like, global fear. It's not just speculative, money moving around. It's a lot of countries, a lot of different people constantly buying gold as a kind of defensive play. So the fact that gold's holding up really well is a very good sign. And I think eventually, I think next year it's going to have a very big rally to the upside and start to hit those big upside targets that a lot of people have been waiting years for.
Oh, I've been in this market for 12 years. I'm still waiting, Chris.
Yeah.
Still waiting here. No, fantastic. You mentioned next year, and Saxo Bank, Ola Hansen came out with their forecast for next year for the U.S. economy, meaning stagflation light, sluggish growth, persistent inflation. The question is now for next year, what is your growth forecast, and how does that fit together with what Ola here said from Saxo Bank?
Yeah. Are you talking in terms of gold
Oh,
pricing?
gold. Yeah, gold. Sorry.
Yeah, so I think gold could actually still have a pretty big correction if the stock market and the economy kind of goes down the toilet and we see kind of a financial reset. I think we could see gold potentially back down to $1,700, $1,600, and to me that's not a bad thing. It's not that far from where it is. I think it'll be an opportunity. But once that downside potential panic selling has taken place, I think we're going to see gold rally next year, probably 2,700 very quickly. The question will be if it can get up into that 3,000, that 34, $3,500 mark, US dollars. So I think next year we're going to see gold hit 2,700 at some point. But I do think there's actually some weakness in the precious metals space until we have this financial reset. And it's going to just put some pressure on precious metals, simply because almost every time when we see a financial crisis take place, a big bear market, the dollar tends to be a safe haven play. We see the dollar index rally. It is one of the reasons why gold goes lower. Plus, there's going to be forced liquidation margin calls that pulls gold lower as well. And it's just part of the way the markets are all interwound. So a little bit of weakness in gold, is perfectly normal. I think it'll be a screaming buying opportunity. But as I mentioned earlier, to try not to confuse people, I think gold, silver, and miners are going to be very strong here for the next couple of weeks as money's just starting to rotate into them. We got a short-term kind of sell signal on the stock market. So money's moving away from stocks and they're looking for defensive sectors like gold miners or different assets to move to right now. So short term, I'm bullish on gold. Over the next 6, 8 months, I'm actually bearish on gold. And then next year, I'm really bullish on gold. So, you have to understand what time frame you want to focus on paying attention to or know, understand that.
Absolutely. Yeah, since it's, the end of August here, August 28th, as we're recording, it's pretty much back to school season here.
Yeah.
And how much does seasonality play into gold and the gold miners right now? 'Cause it seems like there's always a bit of an uptick early September.
Yeah, seasonality, I watch it all the time. It's really interesting. It works pretty well across a lot of different commodities and sectors and things like that. I never trade based off it. I mean, we might see an upward positive bias. It's always, fraction, a percent or two difference, which in the grand scheme of things, seasonality is not a super strong signal. But yeah, we should see naturally some strength. And I think the markets are kind of in that situation where people are getting a little nervous. We're seeing some fear. A lot of people are taking a pretty good loss. A lot of people dove into the stock market about a month and a half ago. And I remember telling subscribers saying, listen, everybody's piling in hand over fist. They're paying premiums. And right after that, the markets topped out. And so believe it or not, a lot of people bought in right near the market high about a month ago. And, the AI sector ETF is down like 15-20%. The ARK ETFs are down 15 to 20%. A lot of people, they're down quite a bit. And so now they're giving up on tech, and now they're looking for, a new place, which happens to be gold miners.
Absolutely. I know. I'm excited for you to say that as well, because one of the questions I wrote down for you as well is like, where do you see competition coming from for gold and the gold miners in particular? And I'm, maybe giving away the answer. I'm looking at the bond market.
I mean, I think right now, I think we're seeing just money want to look for safety in the precious metal space right now, and they're moving to cash and the dollar. We're seeing the dollar index hold up. Bonds, I mean, I still think there's more potential downside for the bond market. I think longer term, the bonds are going to have a miraculous rally at some point. I think it'll be a fantastic opportunity, but they're still in a very strong downtrend. There's potential rates could keep going up. So it's bottom picking, and bottom picking is never good because the market can keep falling, and bonds are down like 40+%. It's not something you really want to just try to pick a bottom. That's not the way that I go about things, but bonds could become one of those plays where people will be like, well, they're so oversold, I don't want to own stocks. They might go back into bonds, and eventually we'll see the rates start to get cut if we go into a kind of a recession, and that will spur the bond market rally. So there will be definitely a big battle between, people wanting to own bonds, and bonds will have a big rally at some point, but it's a little early still.
Yeah, I'm just looking because I'm looking at the yields here, right? The 2-year, the 10-year, the 10-year at 4.2, the 2-year was it at 5.1 or something like that. Those are like, how greedy do we need to get? How much longer do we want to, right? I asked my previous guests, like, why doesn't everybody pile in there and start accumulating those high yield, let's call it high yield builds there?
Yeah, I mean, it's a good question. Making 5+% with not much risk is pretty
Right.
good. I mean, especially after 2022, a lot of people took a beating, and yeah, it's not a bad safe return, during this kind of chaos. So I mean, I think rates actually, based on the charts from a technical standpoint, the 10-year note, I mean, it could still actually rally to 5.5% from where we are right now. It's at 4.22. So it's got a potential for another big move, which means bonds are going to fall out of bed and make a new, multi-year low, going way back decades probably. And usually what I've found is usually like one of the biggest percentage moves in any trend happen right at the end of a trend. So if something's falling, it's that last couple of bars, like a last couple weekly or monthly bars are like the biggest drops, and then it'll have a knee-jerk reaction. But those drops are what just cleanse and flush the markets. Same with rallies. That's why we have these blow-off tops in the rally in the stock market. We see stocks just go parabolic. Everybody piles in and chases it. They can't take it anymore of everybody owning it but them. And so we could have one more big drop in bonds, and that is going to spook everyone out of the bond market who's been passive and biting their lip, just holding on to those positions, say with advisors, like they're down huge. They're going to hit a point where they'll be like, get me out of bonds. This is ridiculous. They're supposed to be safe. I'm taking the worst beating of my life. And the older you are, the more bonds you have, and the worse you're performing. Like a lot of people I talk to have like a 40-60 portfolio. So they have 40% stocks, 60% bonds. Some of them have 30% stocks, 70% bonds, because they're even older and they want to be more protective. They're the ones getting hit the hardest. And it blows my mind how so many advisors are saying, just hold, you'll be fine. I mean, this recovery still could take years to come back. The last time we got into a super cycle was the 2000 tech bubble. It took 16 years for the NASDAQ to come back, 12 years for the SP 500. We have that same reset, in my opinion, happening again. It's also the same for precious metals. It's why I'm excited about precious metals. What happened in 2002 and 2001, gold miners, I mean, they're still up trading near highs, or the gold price is. So we're starting another major super cycle. And you don't want to just hold stocks and bonds because they might not come back to life for a long time. You might have to be selective and move into precious metals or miners or something like that.
Well, the miners are paying an attractive dividend yield now as well. Look at Newmont, I think a 4.1% dividend yield as well. And you get the upside, the famous double whammy, right? And you
Yeah.
get the gold price upside there as well for the recovery. Interesting.
Yeah.
We've talked a lot gold, but we haven't really touched on silver. Gold's little brother, obviously.
Mhm.
Do you still categorize it as a precious metal, or in your book, is it more of an industrial now? Because it's still a 50-50 debate in my book, but I'm almost leaning closer to industrial lately.
Yeah. I always look at it as a precious metals. I don't know, gold and silver. It's all I
They
picture
just
is
go hand in
pirates,
hand, right?
pirate
Yeah.
treasure. But yeah, you could argue it's industrial as well. I mean, it's more of a speculative play. Everybody loads up on it, hoping for that big grand slam move sometime. But typically, when gold's moving up, silver is going to be moving up, and they're all kind of the same trade. They just move a little differently percentage wise. So the silver is way down. It's like 40% off its highs, just like gold miners, which goes to say it definitely falls into the speculative category of, people who are really nervous globally with large amounts of money aren't piling into silver and gold miners. They're actually accumulating and holding gold. And that's why gold is holding up so high. And there's also the other play that there's talks about a gold backed currency. And if that happens, I actually think that could trump everything and send gold a lot higher. It could eventually also help boost silver. If gold rallies, silver usually gets pulled up with it as a little brother. So I think there's some interesting wild cards at play. But again, silver, I think, is going to be under pressure with the markets and gold if the market goes into a deeper correction. But it'll be kind of that last, I think, key pullback before we start that next major rally. Silver, 50 plus, I think, is very easy to happen in the future, but it still might have a pretty good haircut back down to that $18 mark over the next 3, 4, 5 months.
That'd be a bigger move. Yeah, interesting. Now that you mentioned it, I haven't heard much of the BRICS summit here in Western media. Like, you have to Google and put in BRICS actually to find something. So reminds me to go look up gold-backed currency again here, because
there's lots of talks about it for sure.
And I haven't heard much coming out of Johannesburg about that. So a bit of, as you said, a bit of a wild card. Chris,
for sure.
I'm going to let you live pick the next topic here, and that's on commodities here. Like, what's another commodity you're extremely bullish on?
So I'm bullish on uranium stocks, but longer term, because I think what's going to happen is I think uranium stocks actually could almost outperform precious metals. They are tiny. It's a small group. They've got explosive potential. But again, the catch here is that I think we're still going to go through a financial reset. So even uranium stocks are going to get pulled down. After we have a financial reset, you look at the long-term uranium charts and uranium charts for stocks, it is formed, decade-long cup and handle pattern, a launch pad that is so super bullish. We're talking hundreds, thousands of % return. The world is trying to move towards net zero kind of carbon, by 2030 or 2035, depending on who you talk to. And really, one of the only ways the world, I think, can get there is actually with all these new micro uranium nuclear plants that are actually very safe. They pound out a ton of energy. They're super clean. And I think it could be one of the next big moves. I mean, one of the things also that could help here is everyone's moving to EV vehicles. And there's all kinds of studies that says the electrical grid is not set up for many more people to keep adopting it to their homes and stations, right? So these, we could see uranium become that. You can drop a machine in here that's, the size of a house, and it's super safe, and it can power a state or a province, right? Like, it's pretty incredible. So I think it could become one of those secret weapons to save the planet.
Well, it was interesting. Macron, the French president, just bashed the German government for their nuclear policies. So that just came out this afternoon here, German time. So I need to do a little more research and read up on what he said. I just saw the headline, but it's making waves, our energy policies here. Really, really interesting. I have to follow up, Craig. I'm not too versed in the uranium stock side, but I've looked at the Kimiko chart recently, and that stock went from $10 to $45 in a period of 2.5, 3 years, really short time frame. Do you think the market is overheated a little bit? Do you think there's still room? As you said, you expect some growth there, but how much is left?
I think the markets are bumping up at resistance across the board. I mean, other than the odd, I think bonds maybe a little oversold here. I think precious metal miners can have a bounce, But overall, the stock market, I think, is up near the all-time highs. It's kind of, they're getting tired. It's at resistance. Uranium stocks have had a very good run, but they're up at a resistance area as well. So I don't think there's much upside. I think if anything, the markets are going to be choppy across the board. We're going to probably see lower pricing for a little while. And the question is, how big of a correction are we going to have here? So I'm not bullish, short term really on anything other than kind of precious metals or moving to a simple, cash position like BIL, which is you just earn a monthly dividend income while we wait for a new opportunity. And that's our most recent position, is move to BIL. Let's sit in cash, earn a monthly income, and keep growing our accounts slow and steady until we have a new opportunity, and then we'll pounce. So that's kind of the way I see the markets right now.
Fantastic. Chris, I'm kind of let you go. I need to ask you about the US dollar real quick, because I think it plays a pivotal role in the gold price, move as well. How do you see that developing, or could actually gold and the US dollar move together higher?
Yeah, I still think the dollar is going to have a really big rally. I think we could see the dollar index right now is about 104. I think it's got potential to go back up to 114, maybe even all the way up to 120. So I think there's a lot of upside potential. It really depends on, if we have this big kind of financial correction, what kind of causes it, and how much people move into the dollar. But every time we've got into what I call a stage 4 decline, which is a financial reset of some kind, which is 2008 financial crisis. It was the 2000 tech bubble. We haven't had one since. Those were the last two. And I think we're going for another one. And that is when the dollar index tends to do very well. When the whole world's kind of falling apart from a financial standpoint, people tend to migrate. The dollar does very well. And that will put pressure on commodities and gold. The big question is, can they move up together? I think there's potential gold can hold its ground and potentially move up with the dollar, but it'll definitely create a headwind for gold going forward. But I am actually very bullish on the dollar over the next, 3-6 months or so, because I think there's weakness in the markets coming. The dollar tends to be kind of that currency, and that it tends to move up in value.
Absolutely. Just looking at the charts over the last week, they actually did move up together. Interestingly enough, because the US dollar came from about 100. Now gold has moved up to 1918 here as well. I think they moved in tandem. So.
Yeah, they did. But I mean, they're fairly small moves. I mean, if the dollar was to run huge percentage wise, the gold's going to definitely be struggling, I think.
No, fantastic. Chris, very insightful discussion. I need to ask you, you've got the book sitting behind you, Asset Revesting. I need to ask you about it. Meant to do that a lot earlier.
Sure. Yeah. So asset revesting, more or less, it's a different way to invest or to grow money using the stock market. Long story short, it's a term I've put together because it's different than everything else. You've got, most people know 2 ways to make money from the stock market. You're either an active trader, trading a lot, being more aggressive, trying to generate higher returns, or you're a very passive investor. You just set it and forget it and go through the roller coaster ride. Asset revesting is kind of right in the middle. It is all about taking control of our capital. And then when something isn't going higher, we'll pull our money out and we'll move it into a new asset. We'll reinvest it into a different asset that's going up. So our whole theory is we don't believe in holding anything going down. As soon as something starts to lose its upward momentum based on technical analysis, position and risk management, we move to cash or we move to a different asset. Could be bonds, could be the dollar index. It could be different assets, depending on what someone's interested in trading. And so that's the nice thing about it, is our account is either holding its ground, trading sideways while the market's falling, or it's going up. And we can profit from falling markets. We can profit from rising. And it's kind of, if you're an active trader, this strategy will seem very slow because we're 5 to 12 trades a year. We're just rotating with the market as the tide's going up and down. As I said, we kind of move in and then move out. We're controlling our capital. A passive investor with an advisor who doesn't do anything, they just let it sit, they'll think this is active because we're putting on some trades through the year. So we're this really awkward medium where both parties are like, well, it's too active. It's not active enough. And that's probably one of the reasons why it works so well. I just found there's wave-like patterns that move in the markets. We can analyze all the different assets and sectors and compare how they're moving, and we can get a very good gauge that when a trend starts, we know how much power is behind it, if we should be moving into that asset or if we need to go find a different asset. And so that's what it's all about, is just controlling our capital, watching our accounts keep going up. I mean, it's pretty amazing. Every couple of months, we're hitting new all-time highs. Doesn't matter what the market does. And it blows people's mind once they get, once they get onto that. They're like, wow, this is crazy.
As long as you got the patience, I guess, right? 5 to 12
Exactly.
trades is really not a lot. So
It's not, no.
fantastic. We can find it on Amazon, I'm assuming, worldwide.
Yep. Amazon, anywhere, really.
Fantastic. Chris, thank you so much for coming on. Where can we find more of you in general? I think the technicaltraders.com right behind you there. Is that the go-to?
That's it. Yep.
Fantastic. Chris, awesome discussion. Really like that we just focused mostly on gold and silver, and I'm going to direct everybody else to the other interviews I've done with Michael Pento and David Hay just recently here as well. Really enjoyed the discussion here with Chris. A bit of a technical insight more into gold and silver. What is he expecting to happen? I'm bullish as well. Like, it's looking positive. As he said, I've noticed in my portfolio a bit of a change momentum last week as well. Surprised that gold is, rallying despite what rallying is a bit of a strong word, but moving upwards slightly despite what Jerome Powell said as well. So showing a bit of a contrarian activity there. Really good for my portfolio personally. I've been hurting over the summer, I have to admit. It's been a tough few months here, but really positive for the fall. And if you have any questions, write us, send us a message, engage with us, hit the like button, engage with Chris as well. He's really on Twitter, his website as well, super approachable. Hit the subscribe button here. 80 to 85% of you are not subscribed watching this channel. Let's change that. I want to get Chris back on more often, bring other high caliber guests on as well. Really appreciate it. Thanks so much for watching. We'll be back with lots more.